Good morning and happy Monday. The stock market is going to open in about 30 minutes. Pretty exciting day. It looks like we may have put a potential relief in the Middle East this week, but we'll see, right? That can change any minute, can change any day. In this video, or live stream rather, today, we want to go over the portfolio updates over the last 2-ish months. We skipped an update in June because of vacation. So I want to give you an update there. And before we dive in, let's go briefly through some disclaimers here. Because all of this is for educational and informational purposes only, of course. There's no investment advice here. Investing involves risk. Please always do your own research. No professional advice given, no relationship. All right, all of the good stuff. Let's dive in. So our portfolio is currently actually down over the past 3 months. Robinhood doesn't give you a 2-month view, so I chose 3 months. It says 12.3-ish% over the past 3 months. End of last week, we probably saw the largest drop. Mostly because we have a decent exposure to Tesla. Some of it also leveraged either through options or TSLL, a leveraged ETF. So that's something to be expected, right? We are long-term investing in the company. I think the future is bright as long as the company continues to execute well. Of course, there's always risk involved with that, but we're actually fine with holding it. But currently, if we compare our performance to the S&P 500, for example, on the side there, then we have some catching up to do, as you can see. Okay, let's see what we actually did last month. So one of the most recent options transaction, and if you're new to this channel, we're actually helping people pay their bills by learning how to sell stock options for cash flow. And this is one example of this. We basically sold a cash secured put here on the company called RKT companies. They offer mortgages. They also own Redfin, a real estate platform that's somewhat popular, comparable to what's the other big one? Can't think of the name right now. Zillow, right? Comparable to Zillow. And yeah, what did we do? We collected $68 of options premium that showed up right in the account, and we put $1,300 at risk for that. So that's roughly, doing a little bit of math in my head, it's roughly a 5% return over, let's see, a month. We sold this in the middle of July, and then it expires in the middle of August, roughly. Yeah, so right now, Rocket is just slightly above $13, has seen some up and down. So we'll see how this one plays out. It's still a little bit early since we have till middle of August to run. So this is probably one of the better moves we made this month. This one was also a great one. We sold a covered call on TSLL, the leveraged Tesla ETF I mentioned earlier. And as you can see here, that was filled early in July. And we actually, since then, we have bought it back because TSLL is currently trading at around $7.50. So we could basically buy that back for just $1 in premium. So we collected $69 and then closed it early. Most likely, well, we'll see. We'll see if Tesla recovers close to the range by early August, but right now most people expect that's not going to happen. That's why we could close it early for such a low premium amount. And that's actually nice if you sell a cash secured put or you sell a call. If you have captured 50, 70% or even close to 100% of premium, why wait till the end of the expiration where the market could do anything and you could lose the premium you already captured? It's oftentimes better to close the transaction early. So we can actually, if it's a cash secured put, we can deploy the cash flow in other ways. Or if it's a covered call, we might have the option to sell another covered call for more premium later once the value of the company recovered, if that were to happen. Now on the covered call side, That's not always going to happen depending on what your expiration is set at. So that's more like a maybe. So I usually don't close those very early. I don't close those around the 50% range unless the change happens very quickly. And I think it's temporary. I usually wait until at least 75% premium capture before closing those. It depends a little bit on the scenario. It can be a little different, a little higher, a little lower, but that's roughly a ballpark target I aim for. Okay, so that was the covered call on TSLL. Worked out really well, captured that premium early. Let's look at the next one here. This was cash secured put on TSLL, and I'm showing the $11 one. We actually sold a $12 cash secured put maybe a week before, a few days before. So Tesla and TSLL kept correcting lower around the time, and then last week we had the earnings report where investors responded pretty negative after that. That's why we're currently at $7.50, and this put has a very high chance of being assigned, right? End of July. So we have a little bit of time. Things can shift, but it's only 4 days. Most likely we get an assignment here. I'm totally fine getting the assignment at $11, though I think long term we'll be able to sell covered calls against this. Maybe not right at $11 really soon, but we'll see. That can also happen soon. And the other $12 cash secured put, if I remember correctly, that still has an extra week or two of expiration. So we'll see how that one plays out. It's a little early to decide there. Yeah, that's some of the transactions I wanted to share. In general, why do we invest in Tesla? Some people don't like the company at all because of Elon Musk or whatever. In my perspective, there's, I think, close to 140,000 people working for the company. It's a publicly owned one. Elon only owns, I think it's around 25% share. So he mostly works for the investors and the employees, first of all, of course, and only a little bit for himself, right? So I think we shouldn't make it all about one person. We should make it about the overall company, what it's achieving, what the mission is. And one thing I like about Tesla is they don't care a ton about earnings reports and temporary movements of the stocks. They care about the long-term growth of the company and the long-term mission and vision. And I like those kinds of companies. I can handle short-term impact, as we have seen in the portfolio. This is a Roth IRA portfolio where we are selling puts in. So we have a long-term perspective anyway. As long as that long-term trajectory and prospects don't shift, I'm totally fine with holding these shares. But you have to decide that on your own, of course. Every person has a different sensitivity to risk, and of course leverage ETFs. You shouldn't really buy or sell those unless you really understand the impact of that. There's also decay happening underneath. So if you look at a chart of Tesla and TSLL over a period of a year or so, you'll see that while TSLL is leveraged, and that leverage can go up or down depending on what the company does, the value will not go up or down in the same scale, because it relies on options being bought and sold underneath to maintain the leverage, and options include premium decay over time, even if they buy long-term options. That's something that you just have to consider. So what TSLL does to buffer that a little bit, they pay out some dividends to help with it, but you have to look at the numbers to see if it makes sense as a long-term perspective. Most people, they only buy or sell this short-term, and that's also what I'm normally doing. I'm focusing on Tesla for long-term and TSLL for short-term. Short-term for me is like 6 months or less, ideally. Sometimes I do 12 months or more, but 6 months or less is kind of the target for the moves that we make. Okay, let's share some other exciting thing. We have a community where you can learn more about stock option selling. It's found on saltmoneyoptions.com. You're welcome to join us there. We have all kinds of cool trainings. We have these monthly Q&A sessions. So if you have any questions, you can actually hop on a Zoom and get it answered. Right now, we have so far answered every question that people have asked there. So we'll try to maintain that as long as we can. And in addition to the Salt Money Options community, we also have an interactive educational and simulation / training tool called Optiontunity. You'll find that at optiontunity.com. You basically go through a learning path there, learn about options from the very basics. If you have never used options before, you can start from scratch. And you gradually learn more and more of the slightly more advanced strategies, and then you can put it into practice. It has a simulator. You can choose which company you want to sell the option for, what strike price, what type of option, of course. And then you can click on Advanced Week and you'll find out what happened. Did you get assigned? Did you keep the premium? So you can really develop a strategy and test it in the simulator. And one cool feature that we're also working on in the background, it's the paper mode. So once you have experience with a simulator where you are not bound by time, then you can switch to paper mode where you actually look at real option prices, stock prices, and you make your decisions as if you had real money on the line, and then you have to wait a week or 2 or 3 weeks, 4 weeks, whatever you choose as an expiration. You have to wait if your choice plays out well, and you get a feel for these strategies without putting any of your real money on the line. That's something we have on our heart to make this more approachable to people that are not really familiar and reduce the risk and help people take advantage of more of the opportunities there while avoiding the major risks of losing money, right? That's what Warren Buffett said. Rule number 1, don't lose money. Rule number 2, see rule number 1, and rule number 3, see rule number 2, or something like that. I'm paraphrasing, of course, and I was trying to recite from memory. But basic idea is we want to avoid losing money and have a long-term perspective, focus on the value of underlying companies, and only sell options on companies that we're willing to own and hold long-term. So if a price drops, we're okay with that. And one thing to also keep in mind with selling options on individual companies versus ETFs, individual companies tend to underperform the index on average over longer periods of time. That's something it's really good to understand. So most likely, most stock pickers, they cannot beat the index. And even with options premium, if you don't pick good companies and just sell options randomly, you will also underperform the index still. So you have to combine picking valuable companies at reasonable prices, so not near highs. You have to, I would say, stay below the average on the 12-month period when you're selling options. So if there is a drop happening, you have a higher chance of recovery. Usually those drops, we don't expect them, so we then have to manage and maintain. And the combination of a few factors like that, solid strategy, all of that we are teaching in our boot camp and in our community, you can actually quite easily outperform the index in the long term. Short term, like we have seen, might not work out, right? But long term, as you can see in these images, you can very strongly outperform them. Okay. Yeah, that's it pretty much for this session. We're about to hop into our Zoom call for live Q&A. If you have any questions, please join that, and then we'll go over those for our community. And I look forward to seeing you in some of our next videos or in the community. And yeah, always feel free to reply to emails you receive from us if you have any questions, any feedback. There's a feedback function in the settings area of the optiontunity.com app as well. So you can give us your feedback there and your questions. We really value that. Of course, comment on social media, we get the feedback that way as well. Thank you so much for watching, and I hope you have a great week in the stock market. Some people call it the greatest show on earth, and I feel like the more you understand it, the more interesting it becomes. Like with most topics in life, things might be shallow or not that exciting at the beginning if you don't understand it well, but the deeper you go into it, the more interesting you find the nuances that you are discovering. So that means every area in life, don't stay shallow, try to go deep so you can actually enjoy it more, you can be more happy, and really have a fulfilled and healthy and long happy life.